All right, folks, good afternoon. Yeah. I got a question on that, but I gotta do the disclosure first. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is basically the same. I actually sold. I got out of the RGTI, which I took off, but I also sold some, which I didn't write on here. I can just write it on real quick. I sold some additional Apple puts at that expire tomorrow at the 220, 250 strike. So I forgot to add that on there. But otherwise, the position disclosure is the same, except I got out of my RGTI short. Okay, let's take a look at the market. So quick, Bill, if we open in the range, from your experience, when they have that trade on, I know it's never been on this size, and we don't open in the range, what's the effect? I certainly understand what it is if we open within the range, but I don't fully understand the additional consequence of opening outside the range. So I know that when we're in the range, the upper band acts as resistance as an example. If we gapped up above that upper band, does it then start to create a support above it? I guess, yeah, okay, it would, right? So they need, ideally, the gap to be in the range or for us to very quickly fall into that. So it's almost like I didn't realize just how big they were betting on the gap itself on that, because I know that they always put it on the night before, and then it just always feels to me like whenever it's big, we're trading within the range anyway. Yeah, right. Okay, incredible. All right, so let's jump in here. SPYs get closed up 0.5%. The Qs closed up 0.2%. The IWM closed up 0.4%. So we're green across the board here. A little bit of catch up with the IWM compared to the Qs, but not by too much, though it was certainly needed. And the IWM managed to be green today with the TLT being down and interest rates being higher. So that's impressive. Usually they struggle to do that. The dollar here finished flat. So we can review these daily chart technicals here, but to start with, I just want to re-emphasize the point that I made in the morning meeting today. And I know this has actually been something that's become a topic of discussion on a few occasions recently in some afternoon meetings. But in the morning meeting today, so one of the things that we're trying to do every single morning is figure out what type of day the day is going to be as much as we possibly can based on the evidence that we have in front of us, technically and otherwise. What do I mean by what type of day? Is today more likely to be a trend day or a range day? And then you can focus your strategies based on that expectation. As a general rule, trend days tend to have significantly more opportunity than range days do, though there are strategies that you can implement for range days potentially to be able to make a few bucks for yourself as well. When we expect it's going to be a range day, when we expect it's going to be choppy, we expect it's going to be difficult, very simply put, it just means you want to trade less. So if you're expecting a range day, you want to trade less than when you're expecting a trend day, because trend days pay us better and just have better risk reward and probability of success. I think that's relatively straightforward. The trickier part is obviously creating good consistent expectations on what type of day it will be. More days than not, broadly speaking, are range days. I don't know what the exact statistics are on that, but I would assume that it's something like somewhere between every 2 out of 3 trading sessions. It's probably more like every 3 out of every 4 trading sessions is a range day compared to a trend day. So we want to keep that in mind. And my expectation that I presented in the morning meeting today was that today is most likely going to be another more consolidation type day, more of a range day with some downside risk to it. Was really the thought process there. And that comes from a couple of things. It comes from, first and foremost, just the degree of upside extension that the market got to in yesterday's trading session, and then we kind of closed there again today. So just such a huge move. Again, I spent a lot of time talking about this the last couple of days, so I'm not going to waste a lot of time on it today. But such a huge move in this market. SPY 575 to SPY 608, now 609 in a very short period of time, going from $12 downside extension versus the ADMA to $10 plus upside extension on the ADMA, going from extreme downside extension to extreme upside extension in a very short period of time. When we see that happen, it's very typical that the market needs to reset up. It needs to reset up. And what does a reset up look like? It looks like a time or price correction, meaning either the market goes sideways for a while up here, that's the most bullish situation, the ADMA eventually catches up, and then we can be looking for continuation of that pattern, which is a bull flag at that point. Or we price correct lower, then at a certain point, if we've got a good strong uptrend, which we basically are at this point, we can look for a higher low to come back in, potentially at a retest of a previous resistance level that holds a support to create the pivot low to then continue as higher, which can also act as a great trading opportunity. So, like I said in yesterday's afternoon meeting, markets work in periods of expansion and consolidation over time, and a lot of the times it's the consolidation periods that create the setups that enable us to profit in the expansion periods. We've just gone through such a big expansion period from low to highs, and it doesn't mean that there's no opportunity. As a matter of fact, when you have these big expansion periods, sometimes they overshoot, and you can look for counter trend moves. We did that very successfully yesterday. But broadly, as we came into today with like a flat to down open at an $8 of extension from the ADMA on the daily chart, today was a day to not push it. You could definitely hurt yourself more than you could help yourself right now, and the market's this extended but opening in what we consider to be no man's land. So my thought process for today was to generally trade less, not really trade the indexes too much, especially if you were like say coming in flat, which I never do, but some of you do. Not trade the indexes too much, not trade names that are overly correlated to the market too much. Maybe find some opportunities in some stocks that are in play, upgrades, downgrades, analyst action, earnings. I wasn't in love with any of the earnings reports from this morning, but you guys get the point. And generally, that was exactly the right thought process for today. Almost all of today's trading session, especially if you look at the Qs, but you can even see it in the SPYs, we gapped down a little bit, we traded higher, basically went sideways all day. The Qs gapped down, traded sideways all day. Very sloppy price action here. IWM, a little bit more action in it. And that comes not only from the technicals, but also just our understanding of how this iron condor has been working with this market, which I really haven't spent too much time talking about, but now that it's set up for tomorrow to be the biggest it's ever been, it certainly has market impact. We know it has market impact. The market impact on that iron condor at a certain point, on the biggest times it's happened historically, almost has become a self-fulfilling prophecy that the market closes within the range of that iron condor at a certain point when they get big enough with that martingale strategy that they've been doing on it. And what was the number for today on that, Bill? Was it 30,000? 35,000, 30, 40,000, something like that. But it was a pretty big number. And today, actually, because of this wild close, so we were pretty much on target with our thought process that today should be a range day. Pretty much on target that today should be a range day until this close move happened. This move into the close, and I actually didn't see the MOCs today. Just scrolling up, it looks like S&P MOC was 1.3 billion. Nasdaq was 1.1 billion. So we had a really big positive MOC today. that ripped this market higher in these last 10, 15 minutes of the trading session. Huge move. And outside of that, it was a very boring, very choppy trading session until these last 10 minutes. It perfectly met our expectations until these last 10 minutes. But those last 10 minutes were pretty wild. And they ripped this market back up to break yesterday's high, all in the last 10 minutes. Ripped this market up to break yesterday's high and put us back into that extreme extension territory. Yeah, we're trading 109 right now. ADMA is trading at 609 right now. ADMA is at 599. And most likely because that close was so strong, we may see short-term tactical in the red for the third day in a row. That was another thing, another piece of information for this morning to not really expect continuation was that yesterday we closed with short-term tactical in the red, I think for the second day in a row. And most likely because we closed so strong today, we closed again in that short-term tactical zone, in that red zone, which, like I always say, it doesn't mean short, it means don't buy. So we're still in the same situation where we need this market to set up a little bit more. My expectations for tomorrow, we need to see how we gap, but my expectations for tomorrow are going to be roughly similar to what they were today, unless we were to trade up really big. But it's just interesting, circling back to this huge iron condor, which is at 60,000-ish now. Just massive. It was 32,000. Yeah, I knew it was somewhere around there. With the upper range at that 6,110, which we closed above. Anyone have an SPX closing price for me? Like 6,119 or so, I think. So we closed above that. It'll be interesting to see. Thank you. It'll be interesting to see where we open tomorrow, given that iron condor now is absolutely massive at a price of trying to see. I know he just posted it and I can't find it. 6140 on the upside basically, and 6090 on the downside. So thank you. So we will see where we open tomorrow versus those levels, because it's going to be really important. I want to say that if we had a gap up tomorrow, that I 100% would want to short it. But if we gap up past that upper band that I just said, I might not be able to actually get a pullback on that because of the market maker flows that'll come in the other direction that'll make it as a huge support level. So we'll see where it opens tomorrow, how this market opens tomorrow, and then we'll gauge. But generally speaking, on the technicals, if we were to open down tomorrow by a bit, or flat to down tomorrow, then my expectation would just be like a range day with some downside risk. Just going purely based off the technicals here. Whereas if we gap up again tomorrow, we would be an extreme extension on like a day, like a day 10. Maybe you want to argue that we had one rest day in there, and that resets it up. But even with it, it'd be a day 5. So gap up tomorrow is something that I pretty much 100% of the time on this type of move come in and short on the short term. Gap down tomorrow. Let's see if we open in that range or not. But the bottom line is, circling back to what I was saying in the beginning, we need to have an understanding and an expectation of what the day's trading session is most likely going to be. We said for today that was most likely going to be a choppier range day. We were generally correct on that. Today was not a day to be pushing things big in either way. I really feel that we're at a spot right now where we just need this market to reset up in order to create better opportunity for us. And that's pretty much all I've got on the index level. There were some stocks that were in play. We had some good call outs today. Where did that Fubo end? How did that end up closing? It closed really well. This was one of my ideas of the day today, was Fubo long. kind of off this pivot low area or if off of an intraday signal with this Disney news to see if it can begin to work its way back up towards $5 to $6, these highs from the initial post Disney moves. That was a great little pivot low there. Apple got a lot of analyst defense this morning, so I was looking to see if we get an inside and upward continuation on that. It traded great off the open and then was horrible in the afternoon. The opening move was hopefully enough. This was a great pivot low into the ADMA here at 9:45 that I think I called out. Hopefully the upside move off the open was enough to pay anybody that was involved and they didn't overly fight this on the way down and just stop themselves out if you only got involved today on the way down to make sure that you still made some money in it. I shorted some Citi today, which just kind of was a day trade, just same deal. This upside extension of these banks is getting crazy. I'm a big bull on the banks. I'm a big bull on the market itself right now. But it's like I always say, we have to look at trend analysis in conjunction with extension. And when I'm looking at Citi, phenomenal earnings report, don't get me wrong, but on like a day 9 or whatever, also to the upside, or maybe like a day 7 if you just want to count it from the earnings report, this degree of extension in Citi, you almost never see that. Just getting a little bit silly here, the degree of the move. And I would love a dip or a setup to actually buy in these banks. But for the moment, it's like the extension short is really the trade there. So I took it pretty defensively. We just was looking for a move to 82, had a good price on it, made a few dollars on it, got out of the way. I liquidated that RGTI swing from yesterday, but then I reshorted it into this up move. Also, shout out to the team on this one again. Yesterday it was Cameron that put it on my radar when this was trading above 14, and I got a great price on it, was able to make good money on it. Then today I liquidated my remaining long from yesterday pre-market at a good price, and then took it off my radar until Dennis mentioned that this thing was approaching 1640. I shorted, I think, not 1640, 1440. I shorted 1448 by the time I got over to it, and that turned out to be a pretty decent day trade as well. And that kind of covers it, you know. So some opportunity in some of these in play names, but big picture, we need this market to reset up before we can get really aggressive again. And the Iron Condor story is super interesting from a big picture. So that's really all I've got for today. I am happy to answer any questions anybody has. Not seeing anything in the VTF for the moment. Over on my YouTube here, I do got some questions. Varun, why are you always yelling at me? I mean, you ask me about the same thing every day. I got nothing new for you. I like the China trade. I like the China trade a lot. I'm in it. I want to be heavier, actually. I was thinking about buying some yen into the close to size up even further, and I didn't do it. I do have those $25 puts I sold last week that are going to expire tomorrow. But I think it looks good. I think BABA looks good. It's just got to break up. It's got to get above the high from a couple days ago. I think JD has been the real leader here. I do have a position in this JD as well. It's a little bit lighter than my BABA position, unfortunately. So, you know, I like the space a lot. If anything, I want more exposure. It's one of my favorite opportunities in this market right now while we wait for the broader S&P to actually reset up. So that's on the China trade. Over in the YouTube, some questions from Scott. Low vol day on the SPY. Is tomorrow the pullback, or is the SPY breaking out? The SPY already broke out. It broke out a couple trading sessions ago, and it got above 600 as far as I'm concerned. And I'll just repeat what I said earlier. Is tomorrow the pullback? I don't know. A market that's extended can always become more extended. This is an extended market. It can become more extended. That's the definition of momentum. Do I think it's a good risk reward to be buying right now? Absolutely not. Absolutely not. I think that the better risk reward, you have to be cautious though, because you're doing it in the face of strong momentum to the upside. I think the better risk reward on like smaller time frames right now, like day trading to like a 1 to 3 or 4 day swing trade time frame. I think the better risk reward right now is to the short side. Uh, Bigger picture beyond that, I think I'm a bull, and I think that the dips are viable. But while we're waiting for that setup to come in, this upside extension creates a better short than a long. So I would not be buying this market here until it resets up. And if you can find any, if you can find anything, I just got distracted by a missed call on my phone, so I forgot what I was going to say. Anyway, are there any particular metrics or market internals you're looking for on what type of day it will be? I primarily do the exercise I just did. So it's a combination of understanding the technicals and understanding the market dynamics. And I just spent a bunch of time talking about the Iron Condor, but there's also the fact that we're in now back into a decently heavy positive gamma environment. At the same time as that, though, the other aspect of the market dynamics is the forced buying that's coming in from the vol control funds and from the CTAs. So we're aware of that. And we talked about that in the morning meeting this morning. But I think at this degree of extension, even with forced buying that's coming in from those systematic cohorts, I don't like the risk reward of buying here. I like the risk reward of buying a better setup. From Kevin G, what's the play is what I want to understand with the IWM. What's the play with the IWM? So the Russell's been relatively weak the last couple of days, but it held exactly where it needed to hold. When I was doing the morning meeting today, I was saying that the SPYs and the Qs are still too extended to do anything with, but the IWM was actually gapping down into a spot that's viable. We've talked about the importance of this 226 to 227 zone for the Russell. The gap down this morning after the weakness in the IWM yesterday, it's a gap down into previous resistance. It holds a support. It's a good buy for the IWM this morning, and the Russell looks like it's ready to continue. I just like getting confirmation from multiple indexes at once. So even though I thought that the IWM was a good technical buy into the gap down this morning, the SPYs and the Qs I did not think were. And when I have a mixed message from those different markets, that's another reason to be cautious, right? Things like trend continuity and time frame continuity are what we want to pay attention to increase our probability of success on the trades that we are looking at. So the IWM was there. It looks great. I would love to see another day tomorrow of like IWM strength and continuation with the Qs resting and selling down a little bit. I just think that would be really healthy for the market insofar as the reset up process that I keep talking about. From Robert, what is your opinion on changing type of day during the day? Yeah, for sure. So let me read the rest of your question. Today until 11, I was betting a consolidation day, and then Trump's speech, he mentioned pushing interest rates lower, demanding strong U.S. economy. That was at the 11:10 a.m. candle. Yeah, you see the volatility on the candle. At that time, I flipped back to bullish. Also going back to my volume analysis. What is your opinion on? All right, hold on, one thing at a time here. And I probably should have said this earlier. I know I have in the past, but in an analysis in the morning where we're trying to figure out what type of day today is going to be, to figure out how we want to position ourselves and how we want to strategize, you have to recognize that that is just a presumption that we're making based on evidence pre-market, but the evidence that you need to analyze as a trader is constantly updating throughout the trading session. So it's not unusual at all to be wrong on what that thought process is, and it's not unusual to recognize that, hey, what I originally was thinking pre-market and in the morning meeting is proving to not be correct, and now based on the evidence I'm seeing as this market is opening or as it's trading throughout the day, then you make your appropriate adjustment. So yeah, for sure, it's definitely an appropriate thing to do. And then your next part of your question was on your volume analysis. What is your opinion on the trade setup at 1240 where we're testing the low of the 1030 candle? I assume you're talking about the index. 1240, retesting the low of the, what did you say, 1030 candle? Retesting the low of the 1030 candle? I don't see that. Which was breaking out the morning consolidation alongside with the 1110 candle where the volume spikes up on the Trump's comments. Well, so volume is always going to increase. So I don't fully understand all aspects of the question, but volume will always increase when there's a news event occurring. Even when there's a news event occurring that turns out to basically be a non-event, you think about like Fed minutes as an example. When Fed minutes come out that are backward looking and sometimes there is nothing to be gleaned from that at all, you still get like a bunch of volatility and volume that comes in but no actual directional move, but the volume still increases because there is a news event that's happening in the moment. So that's why I do think, and I know you've really been working on your volume analysis, I do think that volume analysis is an important tool, but you have to take it like any other indicator or oscillator or anything that you might look at. You have to take it in conjunction with everything else. The price action is what pays. That's always number one. And then anything that you're looking at beyond that, you need to look at it in conjunction with the price action and in conjunction with any events that are actually occurring, any news events that are actually occurring. So you're asking me about the Qs. 1240 low is a retest of the 1030 low here. Okay. Volume seems kind of dead on those. Along with the 1110 candle where the volume speaks up. I mean, to me, this just looks like you're looking at levels more than even volume on those patterns. Sure, there's a little bit of upticks. I don't like to, personally, like if you look at the volume on the QQQ chart here today, all that like these minor volume spikes, I don't really pay attention to ever in my own trading. I pay attention to, and I don't have any example at the index level in the Qs today. I pay attention to the bigger spikes, the bigger increases. I pay attention when you have a stock that is, let's say for example, really falling down, or a market that's really falling down and falling lower, and the volume is capitulating and it's maximizing and it's increasing on every candle. Like that's where I gain advantage from utilizing volume as a confirming tool, not in. Yeah, I mean, we can say that there was an uptick in volume on the 1110 candle, and it is one of the big. It's the biggest one of the day outside of like the opening and closing candles, basically, or second biggest maybe. I don't think it's so out. I don't think it's outlier volume though. I guess that's what I'm trying to get across. I want to be analyzing outlier volume. This is probably just top of normal. Large within the range of normal. I want to be noticing an outline and analyzing the more outlier volume on the trading. So, hope that helps, Robert. Thanks for the question. Can you explain the effect on the market from the iron condor? I'll do like a basic stab at it. So the iron condor is someone who is selling puts and selling calls on both sides of the market to profit from basically the decay of those options. They're doing them the night before as a 1 DTE. So we just saw 60,000 contracts go off for whatever those prices were that I mentioned earlier. So if the market closes within that range that I mentioned earlier, then the seller of those options will win the entire profit of the decay of those contracts. The real knock-on effect there, though, is who's coming in and taking the other side of that. Who's coming in and taking the other side of that trade? And the answer to that, like always, when we're analyzing our large order option flow, is market makers. So the market makers are coming in. If that iron condor is being sold for a credit, they're coming in and having to be on the opposite side, and they're buying it. But they don't want the exposure on their books of owning that. As soon as they take that on, they are immediately looking to hedge it out. And then those hedges need to move based on the movement of the stock, or in this case, the index. They need to buy or sell more based on that movement, and also as the time decays out. So they need to be constantly updating and managing their position, basically based on a combination of time and price versus the position that they were forced to put on by the, in this case, iron condor seller. The impact that has on the market at this size, and it's in some ways why it's such a brilliant trade if you're a big enough of a player to be able to do it, is it almost makes it like a little bit of a self-fulfilling prophecy, which is why, like Bill was saying earlier, it's so important for us to see if we open within or outside the range of that iron condor tomorrow. If we open within the range, then basically the knock-on effect of it is going to be the lower end of that range is going to act as huge support, because as the market moves closer to the lower end of that range, those market makers, in order to maintain their hedge, have to buy, and the upper band of it will act as resistance, because as the market moves closer to that upper band, then those market makers are going to have to sell at very large amounts in order to stay hedged. So again, it's kind of brilliant in the fact that it is almost a self-fulfilling prophecy. You know, one of the other things, as a similar example, one of the things we spent a lot more time talking about is the market impact of the market-wide gamma that comes in this day in this day and age at the index level. A lot of that's coming from option selling that, you know, we spent some time talking about, like these products that a lot of the big banks have created that are income products for retirees that just bank on constant option selling. And what that does is it creates this huge positive gamma environment at a certain point. And what does that mean? It means that when the market moves up, like last I saw, I think coming in today, we had like $5 billion of positive gamma in the market, right? So that means that if the S&P moves up by 1%, there is basically going to be $5 billion worth of selling, and if the S&P moves down by 1%, there's going to be $5 billion worth of buying. That has a market impact. Going back to trying to figure out on whether or not the day is going to be a range day or a trend day, you have a much higher probability of having a tighter range day the higher the SPX gamma number is, and you have a higher probability of a trend day the lower the SPX gamma becomes, and or when it flips negative. This is like a similar but different concept here, just with the size of the selling of that iron condor, where again, if we open tomorrow within that range, the lower band acts as support, the upper band acts as resistance. It'll heavily increase the probability that we get a range day. Whereas if we somehow were to open above or below, that's when things will get really interesting, because if we open above, then that upper band actually could act as support. So that'll be interesting, and that would actually take away from the potential success of the counter trend short into a gap up tomorrow that I normally would prefer to do. So this is why market dynamics are so important in this modern environment. We are constantly studying here as a team. Thanks for the question from Giancarlo. Could you review the difference in price decline when buying a dip versus buying a pullback think it's the same thing. I think that those two terms, buying a dip versus buying a pullback, are interchangeable. Versus waiting for a consolidation, that's a little bit different. No, there's no. To me, in the way that I use that term, if we go back to the daily chart of the SPY right now, the concept that you need to understand is how I understand personally with my own trading extension. So I utilize an 8 and 21 EMA. The blue line is the 8 EMA. The red line is the 21 EMA as what I consider to be a technical equilibrium zone for the market. The space between the 8 and 21 EMA is what I consider to be the technical equilibrium zone for the market or for a stock on any time frame that I look at. We just happen to be looking at daily chart market level extension right now. So that extension will be satisfied when price touches the 8 EMA. There's two main ways in which we can get price to touch the 8 EMA. One is that the market goes down to where the 8 EMA is. That would be a dip or a pullback. Same thing as far as I'm concerned. So you get a pullback into equilibrium. Or if the market goes sideways and it consolidates and stays up here, we just next 3 days we stay between 609 and 607 every single day. This is just how the math behind moving averages works. Every single day, this 8 EMA is going to work its way a little bit higher and a little bit higher and a little bit higher. That's a consolidation. That's a bull flag. It's a bullish consolidation. Similar terms here. And then a lot of times, very common, when do you get continuation of a technical bull flag? You get continuation of a technical bull flag when the 8 EMA catches up to the base of the bull flag. So that would be the example of the time correction setup. From Mike, if Palantir gaps up tomorrow, is it a good shorting opportunity? I think so. I kept some extra stock short. I think that this move is getting ahead of itself. Obviously, it was positively impacted by the strength of the market into the close. And also, there has been a hell of a lot of relative strength in Palantir again in these last two trading sessions. It similar to the market, though, I really think is due for a timer price correction. Similar to the market, SPYs just went from 575 to 609. Palantir just went from a low of below 64 to a high of now $79 in a very short period of time. It went from decently extended to the downside to decently extended here to the upside. The 8 EMA is down at 73.50. So I'm also looking for Palantir to correct here. It is relatively strong. It is an individual stock as opposed to an index. So individual stocks, I can't promise that tomorrow I'm not going to wake up to 4 upgrades in Palantir and some new good news that comes out on the stock from a huge government contract that comes to them or something like that. I can't promise that is not going to happen. And if anything, it was trading on some positive news today. I think it got a price target increase from one of the sell-side analysts. And also, there was an announcement that the government is re-reviewing a contract that is currently going to Microsoft, and that if Microsoft doesn't get that contract back, that it would either go to Palantir or was it KONP? No. KNPO? No. Someone needs to remind me it was in play today off of this news. It was up a lot at one point, and I think it rolled down a little bit. So the bottom line is that there was some positive news on this Palantir, and I can't promise that there won't be tomorrow. But I think that there's big resistance at $80. KOPN, yeah. That was it. Thanks, Pat. There's big resistance at $80. It's extending into it. I like the short. I had taken off a lot of my short position at 64. I reestablished some of that extra stock that I covered at 64 today at like probably 68, 78-ish. So I'm out of the money on that reestablishment of that stock. So I kept it decently heavy tonight. We'll see if I get punished on that tomorrow or not. But if we gap up tomorrow, my plan is to add further onto that gap up into $80 with the extension that it has. But you got to be very, very careful on counter moves on this stock. This stock can go crazy. But the insiders are still selling. last I saw. From Apex Joy, do you think the TEM and OKLO are good shorts to start? So TEM has been trading on some news. I mentioned, I think you asked me this yesterday on this one. I said I'd be more interested if it could extend into 60 on the short, and I kind of stand by that. You could start tomorrow in these mid to upper 50s on a short off this extension. I think yesterday was a little bit of a reset up day, so I really would prefer one more day up to consider that. OKLO is another one that I would also just prefer to do it on a gap up, and I don't follow this OKLO super closely. Robert asking me a question about writing or selling puts. If no. What you're describing would be that you're selling puts that are in the money. So it's the opposite. If you sold 540 puts tomorrow, you would need the Qs to close above 540 for you to keep the premium. The idea is, and I described this a little bit yesterday's afternoon meeting, or maybe it's the day before that, on this day when I sold the 217.50 and 220 puts. Someone was asking me about options trading and why I don't trade options directionally. Where I've had most of my success in trading options has been in trying to identify where a floor will be, and then selling puts at that floor that are typically out of the money, and then keeping the premium on that, or sometimes at the money. So like I sold, amongst a couple other strikes, I sold 220 puts. So if Apple, and I still have them on, if Apple closes above 220 tomorrow, I keep 100% of the premium from the puts that I sold. If Apple closes below 220, then I don't. Then I potentially begin to take a loss. Really where you take a loss on them is beyond the premium that you receive. So keeping it simple, if I sold 220 puts at $2, my break-even price on it's $2.18. That's my break-even price. So I keep 100% of it if it closes above 220. I still would be positive in the trade if it closes above 218. At 218, I'm break-even. Below 218, I begin to lose money. And then also, if it were to close below 220, I may get the stock on Monday put into my account at 220. So that's how that works. Back over to the VTF from Billy. If we gap up tomorrow, got to take a shot on Citi and Goldman Sachs short, right? So I shorted Citi today with success on it. I didn't keep it. I only would like that trade. So I don't know. You closed today with a little bit of an upside shooting star in Citi. So I think that you could short it tomorrow. If it gaps up above today's high, it's an RDR. If it gaps up below today's high, then it's a short versus the upside tail. So sure. That's on Citi. And Goldman's similar but different with its upside tail. It didn't close as weak, nor is it as extended, but it's also pretty extended. So yeah, I like the idea of shorting Goldman and Citi and shorting these banks into a gap up tomorrow for very similar reasons. Maybe not the same, but very similar reasons as to why I was shorting Citi today. From Christopher, you ever miss a trade or miss an alert on a setup? All the time. Like from a bounce, but price comes back down to where your entry would be, say 15 to 20 minutes later, would you still take that entry as a second chance? Most of the time the answer to that is no. And I see that there's more to your question, but I have always found that the best trades in the market give you one opportunity to get stock. Inherently, if the stock is trading back down to your price 15 to 20 minutes later, you inherently have a lower probability of success than you did the first time. Because I have a lower probability of success, and because I wasn't in it the first time, if I was in the first time, I probably would have already been able to book some profit for myself, take some risk off. Because I didn't have it the first time, I do not like the idea of taking it the second time for two reasons. One, you have a lower probability of success on the trade. Two is you already missed the chance to be able to book some profit for yourself. And now if this thing fails on you, you're taking on a full-on loss as opposed to a trade that could otherwise be break even for you or a small winner for you, depending on how you chose to manage it. So cool. I think I answered your question fully there. All right. About 5 o'clock here. Looks like I got through everybody's questions, and there was a lot of really good ones out there today. It is tempting, especially because they do sometimes work, but we always got to remember it's never about any individual single trade. It's about all of the trades combined and how they impact your account. So anyway, we'll wrap it up there. Have a wonderful night, everybody. I'll see you all tomorrow. We'll see where we gap. It's going to be exciting. And if you're in the YouTube, give me the thumbs up, tell your friends, and reach out to me about becoming a prop trader with T3.